All right, time for a little 2-for-1 on this one. But first, I've gotten quite a few emails that I need to address in this video real quick. Someone was like, "Man, I noticed you put the ads in your videos. I don't mind them, but there was one that was 6 minutes long, and that was just kind of crazy. Can you like not make them that long?" And I'm realizing again, oh yeah, I'm getting a lot more subscribers every day than I ever have in my life. So I'm getting a lot more people in a week, 2 weeks, a month. I could have 4,000 or 5,000 in a month of new subscribers now. So it's like I better talk about this a little bit every now and then. So just real quick, because I've got people asking me questions too, I'm going to cover it all. When you are a YouTube personality or whatever, you upload videos to YouTube, you have an option to put advertisements in your video. What you don't have, you have no control over what advertisement shows up, if one's actually going to show up, or how long it's going to be. So, unfortunately, I can say, yeah, put ads in my video, because I do get a percentage of that, just like every other YouTuber does. And YouTube gets a percent, it's like 55% to the creator, me in this case, 45% goes to YouTube. That's the way it is for everybody. But the next question was, well, what happens if I hit skip ad? And I'm going to I know for a fact because someone asked a YouTube employee this and they gave the answer online. So I know the answer. I'm going to repeat it. And by the way, I am not telling you, you must watch the ads or do or don't watch the ads. It's entirely up to you. I'm not telling you what to do, of course. But the rule of thumb is if anybody hits skip before 30 seconds is up, it doesn't count. If the video happens to not be even 30 seconds, maybe someone did a 15-second video, advertisement that is, 15-second advertisement, and it plays. Well, obviously it can't hit 30 seconds. However, if it plays in full, which means it's 15 seconds went and nobody hit skip, it does count. If you had a 6-minute video ad playing and you waited to 25 seconds and then hit skip, it doesn't count. If you waited to 31 seconds, etc., it would count. Again, I'm not telling you you should or shouldn't do this, or I'm not. That's for you guys to decide on your own, obviously. But I want to clarify that because I do know the answers, and I don't want people thinking that I am choosing to put a 6 freaking minute video advertisement in my damn video. I'll be honest with you. Who the hell would do that? What advertiser is doing this? A 6-minute ad? Come on, like ridiculous, man. Say what you gotta say in 15, 20, 30 seconds to be done with it. My peeps ain't got time to wait. But of course, as you know, skip, the rules with skipping are what I just described. So the last thing I just want to say is I do apologize for having them in the first place, because I would like to not have ads on the YouTube. I don't like ads. However, the fact that we get a little bit of a cha-ching at the end of the month for having the ads, getting my little cut or whatever, it's a wonderful thing. It's beautiful. I love the fact that we can do this. It's like a little side job. I love it. So for that, thank you for supporting me, but I got to get on with this video now, 2-for-1. Thank you. These are both Zero Hedge articles. They don't exactly go together, but it's the same kind of a topic, if you will, doomy economy nonsense. So let's get on them because they're kind of short. First one, Canadian home sales crash in June. Second one, auto defaults soar on the back of hasty loans and, at times, outright fraud? You mean there's finance companies fraudulently putting out loans because they're so desperate to make money and pay their own bills? No. In this economy, this fantastic economy? No, you're lying. Let's start with the other one, though. Canadian home sales crash in June. The Canadian Real Estate Association says home sales in June posted their largest monthly drop since the year 2010. And that was a bad time for the real estate market, if you recall, both Canada and US. With the Greater Toronto market leading the decline, of course. This is the third monthly decline in a row, by the way, and I'd like to just pop this open for you to look at this chart really quick. Oh, try that again. Canada existing home sales month over month. So 2012, 2013, 2014. And, and I got to be fair. Let's look at this one over, we had 3 in a row here. Back in, looks like August or October, November, December. And we actually had 4 in a row here. 2013, September, October, November, December. You know, to be fair. And then again, 2016, June, we have 4 in a row. But if you look at these ones, you notice something that kind of stands out when looking at these 3 in a row? April, May, June. They're pretty large, especially the last 2. They're pretty darn significant. This is big movement. So my question would be, what about July? When are we going to see July? Well, we're in July, so we can't see it yet. So is this chart in a month from now going to turn into another blood red candlestick down even further or close to these 2 anyways? And I'll be honest with you, my spider set, matter of fact, let me just ask. Magic 8 Ball, this time next month is, there going to be a 4th line on that chart going downward, close to or worse than what we already see in the last 2 on there. It is decidedly so. When Magic 8 Ball speaks, you don't even have to wonder anymore. I don't need to ask my, psychic mom, give me a reading. Jason at 4's mom, Mom, can you give me a reading? No. What am I doing? Just pick up the Magic 8 Ball and ask, man. Come on. Under the covers, it's Toronto that is suffering the most. Toronto existing home sales drop 37.7 year over year percent. Average Toronto existing home price fell 5.8% month over month. Average Toronto existing home price up 6.3%. Sorry, year over year. Month to month, not looking good year over year. Vancouver existing home sales dropped 12.2%. Real estate prices, U.S. versus Canada, 1975 to 2016. Have a look at this. I actually showed the chart. Maybe this is the same exact chart the other day when I was talking about this. You see a little problem for our neighbors to the north on this one? Real housing prices, U.S. versus Canada. The blue line's Canada. That is not even kind of close. in a scary way, if I don't mind saying so. And I do not mind saying so. Look at the chart above. Last month, Bloomberg said, on a real basis, Canadian housing prices experienced a much smaller... Wait a second. Joe Hedge, you just put an ad right in my face. Jason M4 style. Stand by. Wasn't a 6-minute ad. It was a 26-second ad. Gone now. On a real basis, Canadian housing prices experienced a much smaller, shorter decrease in prices during the financial crisis and a much larger, longer increase in prices during the recovery. When you couple this unfathomable rise in housing prices with near record high household debt to income ratios, the Canadian housing bubble starts to look scary should the tide turn. That was from Bloomberg. And they also added, no one knows when insanity like this will come to an end. Bubbles are like an avalanche. The longer they build up, the worse they will be when they eventually destabilize. Well, nobody may know, but as Harley Bassman said yesterday, one can make an educated assumption, and as he said, it most likely will be the result of higher rates, which reminds us of last week's decision by the Bank of Canada to hike its rates for only the first time since 2010. And as U.S. homebuyers from the time period 2004 to 2006 remember all too vividly, there is nothing that will burst a housing bubble faster than a spike in mortgage rates, which is why, while Torsten Slok's original warning that Canada is in serious trouble 2 years ago may have been premature, this time it appears all too real thanks to none other than the Canadian Central Bank, which may just have done the one thing that will finally burst the country's gargantuan housing bubble. And finally, those for who are skeptical, here is David Rosenberg explaining why he is skeptical about Bank of Canada's view of a robust economy ahead. In other words, not looking good. Why are they saying that? Now, on to the auto default, Soar on the back of hasty loans and at times outright fraud. Again, you're kidding. A financial institution committing fraud? Liar loans? Ninja loans? Remember those? No job, no income? No. Those days are over, man. That was so 2005 and 6. What are you talking about? In the years after its 2009 bankruptcy, Chrysler, the car company, looked for a dedicated lender to help customers finance their cars quickly, which was code for a lender who could help the struggling OEM expand their market share by making extremely risky loans to subprime borrowers, all while laying off the credit risk to unsuspecting pension funds. Oh, double whammy. Are you telling me that the pension funds invested in some of these companies, and those same companies were the ones writing these horrible, massively subprime loans? And for those who don't know what a subprime loan is, a subprime loan, it doesn't matter if it's cars, real estate, mortgage, a subprime loan or subprime lender, what makes you subprime is your horrible, way below average credit score, like minus horrible red color. You should not ever have a loan. That is a subprime borrower. As such, Chrysler ultimately picked Santander. Oh, no, not that one. The same one? Wasn't that the one in Canada? Or, right? Was it Santander in Canada? Where was Santander? Anyways, as such, Chrysler ultimately picked Santander due to its expertise in automated decisioning, which was code for the ability to advance credit without actually performing income verification tests on borrowers. Ninja loans. No job, no income, no verification. Ninja! Go Ninja, go Ninja, go. Remember the first Teenage Mutant Ninja Turtle movie with Vanilla Ice was in there jamming? Go Ninja, go Ninja, go. Or actually, go Ninja, loan. For a time, Chrysler and Santander enjoyed a perfect symbiotic relationship as it offered Santander an opportunity to aggressively expand in the U.S. subprime market, loan market, and Chrysler, the perennial third wheel among the big three, was able to target customers that were previously deemed untouchable by lenders. Well, of course they are. They don't have a job. They don't have hardly any income. Maybe they're on food stamps or, unemployment or something. But they don't have enough to go out and buy a new car. That's for sure. Anyways, of course, as Bloomberg points out today, the problems surfaced almost from the start. And wouldn't you expect that? I don't have any money. I don't have a job. You gave me a loan anyways? Okay. Naturally, we're going to see some problems right at the start. Many of them, this is from Bloomberg, many of them detailed in the settlement between Santander and authorities in Delaware and Massachusetts. Recall some of the excesses of the subprime housing era. Attorneys general in both states alleged Santander enabled a group of fraud dealers to put buyers into cars they could not afford with loans it knew they could not repay. It offloaded most of the debt, which often had rates over 15%, reselling them to yield-hungry ABS investors. Now, I told you both times when we bought the two used cars, we had a 05 Chrysler, a Dodge Caravan. This was years ago. We did finance it, super low interest rate. Evelyn, you don't have a job? No, but my credit's fantastic. Okay. Mr. J-Snip, how much do you make? Okay, you would definitely qualify, but at the time I had a little credit issue. We're just going to pretend she makes the money. Okay. Sign here for her. Done. Fast forward many years later, we moved back from Tennessee in 2013, whatever. A few years go by, the van's having problems. Get this damn thing out of my face. Evelyn, it's time for you to have a nice car. It's time to have a nice car. Can't have you driving my kids around and the thing that stalls out, possibly at a red light. You're getting a nice newer van. So this was last year, 2016, I think when we first moved into this place, yeah. So 2015, Chrysler Town and Country Touring Edition. We got one here used. Okay, let me go over there. Your wife has great credit. You don't have a job though. Sir, how much do you make? Well, I make this much at my job. Great. We're just going to put it, because her credit's so good, we're just going to put that she makes that. Whatever. Sign here. Wait a minute. Did we just do that twice in several years time frame? One being very close to the crash of 08 and 9 when we had that van. First one. And now after the fact when everything's supposed to be tight and regulation and no fraud and wow, it happened twice. But we don't plan on not paying. We're paying on the thing. I don't want her to lose it, obviously, but nonetheless, whatever. State authorities also said in an internal Santander review in 2013, found that 10 out of 11 loan applications from a Massachusetts dealer contained inflated or unverifiable incomes. 10 out of 11. Couldn't it have been like 3 out of 11, 4, 5 out of 11? So, oh wow, 50%. That would have been a shocking number. 5, we'll just call it 10, 5 out of 10. Wow, 50% was that bad? Oh no. Oh no, it's like 90%. 91%, whatever it ends up being. It's not clear whether this particular case involved a Chrysler dealer, though, it says. Santander kept originating the dealer's loans anyway, even as they continued to default at a high rate, the authorities said. Some dealerships even asked Santander to double-check customers' incomes because they didn't trust their own employees, the authorities said. They also said the lender did not always oblige because that would put it at a competitive disadvantage. At the time of the settlement, Santander said it was totally committed to treating its customers fairly. All of which at least partially explains why auto defaults are soaring to post-crisis highs, even as equity markets continue to shrug off bad data. We don't care. Markets rally, baby. Bad news. Rally. Bank failed. We're going to bail it out. Market rallies on that, baby. Unbelievable. Of course, it wasn't just a few dealers in Delaware and Massachusetts that caused auto defaults to soar. As we pointed out back in May, the problems at Santander were pervasive, with the lender apparently only verifying income on roughly 8% of all the loans they subsequently dumped into ABS facilities and sold off pension and insurance companies. Oh, the pensioners. Oh, whoever was in this one. Oh my God. Like I say, when it comes to these pensions, you don't have a clue how bad it really is. Well, they're not getting 8% like they need. This year was only 2% of it. Is there any reason why we don't? And you know what Santander could ultimately happen? You destroyed the pension funds. We're going to sue you. Okay, we're bankrupt. Sue us. We're bankrupt. We don't have any more left. Now what? You're screwed. It's always you. It's always the taxpayer. You are the screwer or screwy. You're the screwy. You are the screwy of last resort each and every time. Oh, pension problem? Hit the taxpayers up. Illinois, hit the taxpayers up. Raise property taxes. Banker bailout? Nail the taxpayer. Massive market collapse? We got to bail out Wall Street? Tap the taxpayer. Done. This is the best we got. These are the best people. And these aren't, right, the people at Santander, these aren't government officials. These aren't rotten politicians, crooked politicians. No. These are guys like you and me, aren't they? They regularly went to the same schools we went to, same public schools, same colleges potentially. But this all boils down to one thing. We're a company. We need to lend to make money, to pay our bills, to be profitable, just to survive. And if we do what we're supposed to do and check the income on these people, we will never sell any loans but to a few people. And we're going to freaking go out of business. It'll be so bad. We'll be laying off massive amounts of employees. Our share prices are going to drop to the floor because we're going to be having horrible numbers. So we have to just set it and forget it. You're approved. Stamp. You're approved. Stamp. Can you double check some of these? Yeah, sure we will. Stamp. You're approved. Then absolutely not. Will I double check that? Get lost. Chrysler. Will I double check it? No. Got kids to feed. Got commission to make. I've got to make mansion I've got to pay for. I've got 3 cars I've got to pay for. I've got a boat and 2 jet skis I've got to pay for. And I can't keep earning these awesome commissions if I do what the law says I'm supposed to do. Sell, baby. You're approved. You're approved. And if we fail, the government will ultimately back us up because we know that these things have been sent off the pension funds. The government will just bail them out. And after all, the Wall Street bankers got bailed out, so why can't we? Maybe that's the mentality, right? And you couldn't argue with that mentality. Well, they got bailed out to trillions. We only may need a few billion. Still ain't right. But can you blame them for thinking that way if they were even thinking that way? I don't think it was honestly to that level. But anyways, take care.